Hey everyone, welcome back to another episode of Futures Fever. I'm your host, Kevin Dubriske, and do I have a great episode in store for you? We're going to be covering everything from what is Apex Trader funding to what the markets are currently doing. And I'm also going to give you guys some trading strategies and some tips and tricks that we could use as well. So let's get into it. I'm going to cover some slides first, and we're going to announce who won last week's free Apex Trader evaluation account. So stick around, you'll be able to fill out that form in the comments. So why trade with Apex Trader Funding? Apex Trader Funding provides traders with funded accounts, eliminating personal capital risk. Now, this is a great source for trading for new traders, and this wasn't around just 5-10 years ago, right? So you guys are in a great era of that beginner phase, so definitely take advantage of it. You get access to firm capital to trade futures markets. You earn up to 90% of profits, but it's 100% of the first 20,000 you make. So it's really great. Apex is an amazing prop firm to trade with, and you could trade with peace of mind with zero personal liability. You could blow a funded account. You could blow 10, 20 funded accounts and get started right again the next day, or even if you buy an account, you get started again as soon as those new accounts get processed within the hour. So that's what's also great with them is you really don't get the stress of if I blow this account, I lose thousands and thousands of my own capital. But you could also trade with the knowledge that if you remain consistent and disciplined, you could take out so much in capital and profits. So how it works is step one, you would complete the evaluation. You would show consistency and proper risk management. They don't want to see that you're full porting trades. They don't want to see that you're just sort of hoping for the best on your trades. They want to see consistency. Get funded. We want to trade live using Apex's capital. Now, at first, they will keep you on a paper account, so don't even think that you're losing some of their money if you lose or blow the funded account. There's no repercussions. They will give you a new eval, no problem, with whatever sale is available. They're great to use, guys. Definitely worth looking into. And step three is cash out, right? So keep 90% of your earnings. There's no long-term contracts. There's flexible rules and scalability opportunities. So you don't have to go all in. You could take it slow. You could go for maybe $200 a day, risking $50. So you could get a little comfortable with the market. Maybe risk 100 to make 2 to 300. So you have a good 2-to-1 or 3-to-1 risk to reward. So you're not really stressing over your trades. Now, tips for sizing per account. I'm glad I just covered this last slide about, being able to scale up or down and having account goals and sizes. So for the 25K account over here on the left side, our goal is 1,500 and our trail stop is 1,500. So a 2% risk if we're trading a regular full account, we usually hear the 2% rule. We never want to risk more than 2% of our account size. However, when you're getting a funded or a prop firm account evaluation account, we're given a trail stop. So even though we have a 25K account, we really only have 1,500 worth of funding, right? Because that's where our trail stop lies. So instead of risking 500 per trade on a 25K account, you really only want to risk about 150. This will give you 10 wrong trades in a row to finally blow that account, which at that point, it's probably time to start reconsidering and reconstructing your trading strategy. Now, for the 50K account, it moves the goal up a little bit and the trail stop doesn't move as high. So we have a little bit of a gap here. And the reason I put the 250K account here too is because the 250K, look at the goal versus the trail stop. So the trail stop is 6,500 while the goal is 15,000. So the goal is double what the trail stop is, whereas these lower accounts, the goal and the trail stop are very even, like a 1-to-1. So it does become a lot more stressful when it comes to trading a larger account like this because you can't properly size in to meet that goal in the same amount of trades you would if you were on a 50K or 25K account. Down here, I do have some of the numbers. So 2-to-1 takes 6 correct trades to pass the evaluation account on the 50K. And we see that every time we go higher in the accounts, it would take more. So this 2-to-1 takes 5 correct trades. I think 2-to-1, 5. So I think I got that wrong. I think I got the math wrong. I think it's 10 correct trades on that. So I do apologize. Dismiss that last part. Now, they are running a major sale right now. You can use 80% off for code FEVER, FEVER. This ends March 4th, midnight. You also have a 125 one-time PA fee on any account size. This is a huge sale in itself, everyone. So usually the evaluation and the PA fees range anywhere from 160 and higher. So the 50K account is about 160 plus tax. Now, every sale, every evaluation, when you pass it, it's only 125. So I think the 150K account is also about $220 or $240 for the one-time lifetime fee. So that's 50% off the one-time lifetime fee and 80% off the evaluation. So huge sales. Use discount code FEVER. The 150 to 300K evaluations are all priced at $297, and that's before the discount. So once you use that discount code, that brings these accounts, the evaluations, to just $60. Apex has paid out over $411 million since 2022. That is mind-blowing. Don't forget, guys, win a free evaluation. We're going to put the link down below in the comments. Make sure you fill it out for a chance to win. This week's winner, and I do apologize if I don't pronounce it right, is Atilibus. Congratulations, you get a free evaluation account. With this evaluation, guys, you're going to get an email, and you'll be able to get any evaluation size you want. So join us live every Wednesday at 11:30 a.m. for a chance to win. So let's break down today's markets and how the markets are sort of moving around. So the first thing I want to cover is gold. And the reason I want to cover gold is because gold was recently at some all-time highs, but just as of lately, we've been pulling back. So as we see in the past, and we could use our ruler tool to measure how many trading days it's been. So we'll call it from right here. So this bullish day was the last sort of strong move on this trend until we started to stall out. So we'll call it from February 10th until today, which is February 26th. So over 2 weeks, we've been very range bound on gold, with the top of our range being at all-time highs. And we could use supply or demand, or we could use any type of support or resistance strategy to find the highs. And then we could also do the same to sort of find the lows as well. Now, we could also use the wicks of recent highs and the wicks of recent lows too, other than supply and demand. What I mean by that is all these places that were resistance at some point, once we break it, that area will look to hold as support. So now we have our range on gold between 2,900 and 29 about 60. So it's a 60-point range on gold. Huge range, definitely great to trade a range like this, especially if we understand to look to short the highs and buy the lows. So yesterday in the afternoon, even today in the morning, we tried to sell off until we finally pulled back, right? So this was yesterday. We sold off until the afternoon. This is about 11:30, 12 o'clock. We started to pull back for the rest of the day. This morning gave us similar price action. It sold off in the morning, but now it turned around a lot sooner. Instead of turning around at 11:30, it started to turn around 9:30, which is the New York session open. So definitely a good spot. We saw that this was a 15-minute demand zone here, as well as it was the bottom of our range. So we were really looking to see if possibly we could find some long positions at the lows, because we have to remember too, due to the price action we had yesterday and even the price action we were seeing pre-market, a lot of traders were anticipating and looking for the shorts because they weren't looking at the higher time frame, which was telling them that we're currently at the bottom of our range. And when we're at the bottom of a range, we look to buy the lows and sell the highs. Now, I do want to cover crude oil as well. And I want to know, guys, let me know in the comments if you guys trade futures and what futures you guys trade. We'll try to cover all of them today, from the ES to the NASDAQ, crude oil, and gold as well. I did want to cover gold and oil today, especially because of all of the potential news of tariffs and all of the potential supply changes and everything that's going on in the economy, because that's what's going to have a big impact on the market. And scan that QR code right there for a chance to win a free Apex evaluation account. So let's go over crude oil now. Now, crude oil, I was looking for some potential shorts today around this 1-hour supply zone, right? I had my trade tool set up here. I even saw we had a strong 15-minute imbalance, which is this fair value gap. But I really wanted us to break it into supply, because what would happen at that point is a lot of traders, retail especially, are going to try to short this gap with their stop loss at the high. Now, where their stop loss is, that's where my entry would be. A lot of times we hear, oh, your stop loss is my entry, don't be my liquidity, whatever the case may be. Well, it sort of speaks some truth, right? We want to be aware of where some market makers and where some institutional and some retail traders are placing their stop losses, because those bigger traders, institutions, they understand how to manipulate price to stop us out, to hunt for liquidity, to do whatever the market does and needs to realize that much volume that is necessary to make that next move up or down. Now, I had the opening price marked out on crude oil, and the reason for that is because when I was looking on the daily time frame this morning, I saw we already broke that previous day's low. Now, when I use the tool Edgeful, this is a statistic-based platform, and it definitely does help, guys. It could give you a bit of an advantage when it comes to trading an evaluation or an Apex account, because it gives us the stats. So I wanted to look at crude oil. So we have our watch lists. I have ES and Q, GC, CL. I have micro GC because they don't have GC on what's in play. So you'd have to do micro GC. Oh, they don't have that either. But I keep GC up there because if I want to go to the previous day's range, it'll bring me this full report. And I could go over to, let's say, gold, and it will break it down for me. So right now we're looking at the New York session, previous day's range. When we break previous day high broken, we have a 68% chance of closing green, and it gives us the streaks as well. So the last 5 trading days, the last 5 days we broke previous day high, I should say. We were able to break previous day high and close green, which tells me when buyers are active in this gold market right now, they are strong, and I'm able to take some longs with confidence. Now I'm looking at last 5 previous days broken low and closed red. And same thing, it's almost 5 out of 10. It's almost 5 out of 5. It's 4 out of 5. So again, bears have more strength when they're breaking lows. Buyers have more strength when we're breaking highs. But we were looking at crude oil, and I was looking at the same report, the previous day's range. So what I noted, and I wanted to use the daily session, because before, when I was doing my technical analysis in the morning, it was, let's see, we'll use the replay system. I do my TA around 8:30. So it was around here. This is the 8:30 candle on the 15-minute time frame. I was looking at our opening price because we broke previous day low. So I knew that if I could find a short position above the opening price, I could target below the opening price because I'm anticipating or expecting, because the probabilities are in my favor, that we close today below this price level because of the stats we went over. I had the supply zone up here, so this would have been a really great trade had it worked out. Unfortunately, crude oil stayed very range bound in the morning, not really giving us any good setups. But that's sort of how I broke it down. I was able to look at the stats. I was able to look at the daily. So I was looking at the full daily session, right? And I saw previous day low broken. Well, it's actually been struggling on crude oil. 3 out of 5 of the past previous day lows broken, we closed green. So that tells me that a lot of sellers keep getting trapped and keep getting trapped, right? So now, because of that, I might look to see if we could break this and close above that. And we're looking at the daily time frame now on crude oil. And something else I notice is that we get strong drops to the downside, but then they're followed by some consistency higher, followed by a very strong impulse move. Even the other day, we opened below previous day low right here and still managed to close green. So even though, yes, crude oil is in a bear trend right now, we have to remember and look at the current price action and seeing what setups are setting up. Now, if we wanted to look at the 15-minute orb on crude right here, we would mark the 9:30 candle on the 15-minute time frame high and low. So we would come to our 9:30, and we could see what time I'm looking at. If you're looking at the crosshair and come down here, this is the 9:30. So we're going to mark that as our orb. That's our opening range break. That's our orb high. This is our orb low. So that right there gave us a very tight range on crude oil, which makes it very difficult to trade. And we have to be able to recognize when markets are in ranges like this, so we know to stay out of it, right? We don't want to end up getting chopped up. We got to break out here. We failed this key level. We broke down. We failed to continue lower. We broke back up. we're failing to continue higher, we're back in the orb. This is inconsistency in the market, and that's why the orb trading strategy can be very helpful. Now, if we were looking at something like ES and NQ, and we wanted to mark out the orb, let's take a look at ES right now, guys, and let me know, what do you guys trade more, the S&P 500 or the NASDAQ? So here we have the 15-minute time frame, and right off the bat, I see we had a basing candle right here, and I always look for basing candles to find some type of support to see if we can continue in the opposite direction, right? So if we were moving lower and we had a red basing, I would look for an impulse move and continuation. So the ES today, I'd really like to see it maybe hit the 60.28 level. Now, I do also use a tool called Bookmap, and this is a fantastic order flow tool. And the reason we need order flow when it comes to trading is all of our technical analysis is great, but what really moves the market is the volume behind it. And being able to spot and see that volume behind it really gives us the advantage to confirm or tell us that we maybe shouldn't be taking a zone. So very important to have some type of order flow analysis tool. You guys saw before I use a statistic-based platform as well. These are all tools to help give me an edge in the market every day. Every morning, I do my pre-market analysis from 8:30 to 9 on the Bullish Bears Trading YouTube channel. Every morning, you guys are free to come join. And we do this. I go over gold, crude, the NASDAQ, and ES, and it gives me some type of idea or clue as to should we be bullish, bearish, or are we range bound? Now back to the orb strategy on ES, we saw that we had a very strong break. This is our 15-minute candle here. We had a strong breakout. So once we have a breakout in one direction and we're able to close on the 15-minute with some strength, then we can really only look for trades in that direction. Now, that doesn't mean we have to take a long right away and it won't pull back, because sometimes we will, sometimes we will pull back, and we'll pull back to this range and hold it as support. Now, those are the most ideal entries when we're able to come back to our orb and retest it to find a entry on a second leg. But it doesn't seem to be lining up right now. We could throw our Fibonacci tool on there as well, the Fib retracement. So we're going to mark it from the high to the low of this current trend. Actually, put that backwards. From the low to the high, because we're going higher, and it's going to give us our 50% and our 61. Now, our optimal trade entry is between the 61% and the 78%, right? That's our optimal trade entry, OTE. Now, if that starts to line up with something else, just like the orb, right, or some type of price level or a supply and demand zone, that gives me confirmation that I should be taking this trade. Guys, don't forget, fill out that form in the chat below for a chance to win a free Apex evaluation account. It's right below. You guys could fill that out for a chance to win. Join every Wednesday at 11:30 a.m. Eastern for a chance to win. All right. So looking at ES, we had a strong move higher. And to confirm this trend, we could have looked at something like Bookmap to see. Unfortunately, we don't have that data from back there because the application was closed, but we would have been able to see buying volume, selling volume, and it would have also given us our session volume profile, which would have shown if we have consistent volume to the upside or not. Now, luckily, with TradingView, they added the volume footprint chart, which is great. They added this a few months ago. It really is a fantastic add-on. You do need the TradingView Premium to use it. Now, how I use it is, and I'll show you guys the basics, is we'll look at the buy and sell. So what the footprint shows us is it shows us the sellers versus the buyers. Now, when it shows us the sellers, we sort of want to see, are buyers heavier than sellers or sellers heavier than buyers? And that's called delta. So if we have more buyers than sellers at this price level, we'll have a positive delta. If we have more sellers than buyers, we'll have a negative delta. So what we see right here on the bottom of each candle is it tells us this candle's total delta and the total volume. So the total delta on this candle was negative 900. This one was negative 800. So we saw at this point on this ES trend, the market was starting to get faded. We were starting to see some selling pressure, and continuation ended up failing. So this would have been a great place to possibly exit those long positions. Now we see right here on our impulse move out of our orb, we had positive 11K in buying delta. That is a huge, strong move to the upside, very positive. And this is the 15-minute time frame. So we could even go to the 5-minute and mark it out from there as well. And we would have seen very strong buying. Now, back to what the footprint shows us. So the selling is the red on the left, the buying is the green on the right, and there's a black level in between, and that's our point of control. That's where the most volume was traded on that candle. So what I'm going to do now is we're going to double click and go into settings, and we're going to go to type under volume footprint. We're going to go to type. Now there are two that I like to use, the delta and the total. What the delta is going to do is it's going to do the math for us. So we see this level right here is negative 3,260 and positive 3,600. So it's going to do the math for us and tell us that that was probably positive 400. Right, positive 363. So it does the math for us to tell us, do we have positive deltas on this move higher, or do we have negative deltas? So when we had strong momentum, we had positive delta, and we'll bring it down to the 5-minute too, so we could see it even more zoomed in. We had good delta on this candle. We had some sellers that faded because there is very light volume there. But what we would have really looked at was the strength on this one right here. Now, this one right here gave us that imbalance that would have given us our potential trade entry, which would have been right here on those longs. Remember, guys, we started with a 15-minute time frame. We waited for our 15-minute orb, and now we're able to look at our 5-minute fair value gaps, right? We're able to break down our technical analysis from higher time frame to lower time frame to entry criteria time frame. And that's exactly what we want to be doing. We want to make our trading very basically systematic, right? We want to be able to write it down to a T. We want to basically be able to make a checklist of what to do and what not to do. And that will keep you in line as well on being able to keep your losses small and let your winners run. So we saw that there was even a strong negative delta right here. Now, this would have given me a clue once we had this strong negative delta and started pulling back at that point that we might have trapped buyers here. I'm sorry, trapped sellers here, because that's a lot of negative delta. Even on this candle was negative 2,000 delta. However, the candle had a very long lower wick, which even just reading the candlesticks, a lower wick tells us what? It tells us that there are trapped market participants, whether that wick is to the downside or to the upside. Now, if the wick is to the downside, it's trapped sellers, and the reason for that is because at some point this candle was a full red candle, and people had to have been selling at that point to move the market lower. So when people were trying to sell, even retail traders trying to catch this move lower because they think we're reversing, they're getting trapped. The market was able to reverse and hold this area of interest. We were able to confirm that with our 5-minute fair value gap, and then our order flow tool as well. And that's what gives us sort of the perfect setup, right? The perfect grouping and the perfect confirmations. We want to look for consistency, and we want to be able to really identify positives, pros, and cons in our trading. That way we could work on the cons, and that way we could really, really see how the pros can accomplish such greatness when it comes to trading. Now, I do want to cover, did we cover crude on the daily? Yes, we did. So crude, obviously a bit more bearish. If we are looking at ES and NQ on the daily, we pulled back very strong. We see these lows sort of starting to come in here, a lower low, a lower low, a lower low. However, what do we really have here? Well, what I see is this. We took out this low right here, and then we reversed and made an all-time high. We took out, now maybe, who's to say we don't take out this low right here and then reverse and go make another all-time high, right? The best time to buy is when others are selling, and the best time to sell is when others are buying. Now, we do have Nvidia earnings today, and I want you guys to be there because I'm going to do some technical analysis on Nvidia, I believe, before the earnings call. So definitely be there, and we will go over some zones and some levels. And I'm bringing this up because Nvidia earnings could be that make or break that either brings us back in the bullish direction or breaks us and brings us back lower and continues lower. Guys, let me know if you think we're going higher or lower in the market, and we'll see what happens. Next week we'll recap and we'll regroup and see which direction and what strategies are working best. This week we were covering the orb. Maybe next week we'll cover the gap fill. Gap fill is another great trading strategy. All right, let's take a look. Now, this is ES on the daily time frame. We're going to get rid of these fib tools for now so we have a clearer picture. Previous day low is over here, so we didn't take out previous day low. We did take out previous day high. Now, when did we take out that previous day high? Well, let's break it down to the lower time frame again and sort of get an understanding and a feel for where these key levels were. Okay, well, we had our 15-minute order block or basing or demand zone form right here. We have our impulse move, which is great. And then we even had the retest in this impulse move, which gave us the confirmation that we were going to continue. So if we didn't take this trade, we would have tried to find another pullback entry to target this previous day high or whichever other price levels might show themselves on a tool like Bookmap, like the 60.25. That was also another strong level. I'm sure even right here we see the session range volume profile. This is the volume delta. That's why it says VD, because I named it to just delta, because in the settings on this one, it only shows the delta. So I have the volume profile to the left and I have the delta to the right. That way I could see an overall and get an overall understanding on if this volume is more to the downside. Do we have more aggressive sellers or do we have more aggressive buyers? That way it really breaks down my volume analysis for me. Guys, don't forget, last few chances, fill out that form in the comments below for a chance to win a free Apex evaluation account, an evaluation account of any size you want. All right, let's break down the NASDAQ real quick. Any last minute questions, guys, please let me know in the comments. Appreciate you all for tuning in. Check out the NASDAQ. I had a 90-minute supply zone up here on NQ, and that came from yesterday's price action from pre-market. We had our 7:30 candle that closes at 9 o'clock, and the 9 o'clock, which brings us to the 9:30, which is the New York Open, we had a very strong move to the downside until we found some support and demand. So what happened today? Well, we found our way back into the same relative zone, and we're finding resistance here. So this could have also been another possible trade setup off of supply, and we would have been able to use our order flow tool on, say, NASDAQ to see that up here that there was some resistance. There's even our point of control moved up to the 21,400, which point of control is where the most volume is averaging price, right? So that's also another key level to be aware of. Really great stuff. Good stuff. You know, the market is giving us some good opportunities. Even though we have been a bit range bound, I have noticed that just lately we've been getting some better moves even within these ranges. So hopefully going forward, we either get some type of Nvidia earnings that spark some bulls, we get something that motivates the market to move in one direction or the other to give us a good trend to trade. All right, guys, I do hope you guys enjoyed this week's Futures Fever. Any last questions, you guys let me know. Join us next week as well for a chance to win another Apex evaluation account here on Benzinga at 11:30 a.m. Eastern on Futures Fever. Have a great day, everybody. Take care and happy trading. See you guys next week.